Well, with the change in phase of the oil price, you have deflection in the government liquidity. We've also seen it percolates down the line. The region itself is going through extraordinary downturn in terms of the liquidity. That has created stress. The local market liquidity is drying up. That is increasing the interest expenses. And banks are getting into international markets for borrowing. That's number one. Number two, the majority of the business is confined to contract financing. The legal risk confined to contract financing is not fully measured, managed and controlled. We need to create more public-private partnership model to resolve this. Number three, the growing Gulf states, if you look at it in terms of overall aggregate growth, it is less than 2%. It has got direct impact on the credit expansion as well. If the economy is not going to grow, the credit expansion will also slow down. We are facing the issues. We also seen the counterparty risk and global growth itself is slowing down. That has triggered a much more cautious approach to the facilitation by the correspondent banks for the Gulf countries. So you have bigger challenges. To overcome the challenges, one has to redefine the business model. And that's what an institution like Doha Bank is trying to do. The Qatar growth is in the range of 3.4%. The Gulf region itself is going to go to between 2%. So what we are trying to do is to redefine the business model and have a synchronized growth. And that's what the way forward. Well, we have to fix this shortage of liquidity. Sovereign borrowings are already taking place. Abu Dhabi has borrowed, Mubadala has borrowed now. We are seeing similar reflection in the rest of the sovereigns as well. Qatar is coming out of $5 billion. They already pronounced it. And Doha Bank has taken shareholders' approval day before yesterday. On 11th of May, we have taken shareholders' approval for $5 billion for the next 3 years borrowings. That in multiple forms, commercial paper as well as certificate of deposits in addition to the existing EMTN programs. That is going to give additional liquidity. And we are operating in multiple countries. So we have capacity to borrow cost effectively. We are a A-rated bank. Qatar itself is a AA-rated country. So we're going to tap the international market as soon as the timing is correct. Qatar banking industry, in line with the overall economic momentum, should do between 6 to 7% credit expansion. The region itself is going to do between 2 to 2.5%, and the credit expansion will be in the range of 5 to 6%, not more. The overall growth should be a synchronized growth, as I mentioned. So it will not be an exponential growth, it will be a moderate growth, more of consolidation in the industry. And banks are very cautious in terms of their business modeling, and they are going to have a very reasonable return by redefining their business model. And return on average equity is coming down between 10 to 12%. Net interest margin is costing between 2 to 2.5%. So it's an all-round game change, and that's what we are seeing this year.